A technological race unfolding in real time, with massive implications for how we defend nations, build products, and process the world around us. While Wall Street focuses on the usual giants, NVIDIA, Palantir, Microsoft, Alphabet, a quiet revolution is unfolding behind the scenes. Two lesser-known companies are laying the foundation for the next era of the AI economy. They aren't just following the trend, they're shaping it. One is deeply embedded in the defense sector, enabling military systems to think faster and act smarter. Another breakthrough is unlocking computing power once thought impossible, where AI meets quantum. These aren't hype stocks. They're high-conviction bets, each at a strategic turning point, offering investors early access to undervalued innovation within a trillion-dollar trend. But before proceeding, note that this video contains forward-looking statements based on current assumptions and expectations. These are not guarantees of future performance and may involve risks or uncertainties that could cause actual results to vary significantly. All right, starting with the first AI stock on the list, BigBear.ai. Holdings ticker, BBAI. Let's examine the fundamentals behind this growth stock. BigBear.ai is a high-stakes player in the AI space, delivering data-driven decision dominance across defense, intelligence, and commercial sectors. Its scalable AI and ML platform supports mission-critical operations through products like TrueFace, ProModel AI, Shipyard.ai, and Conductor OS. Operating within a rapidly expanding market defined by data complexity and velocity, BigBear.ai is establishing itself as a trusted partner to U.S. government agencies and infrastructure systems, especially in national security and airport surveillance. As of Q1 2025, its contract backlog stood at $384.9 million, up 30% year-over-year, anchoring future growth potential. Valuation. Despite its recent outperformance, BBAI still trades at a relative discount compared to peers. Its forward 12-month price-to-sales ratio of 12.04 is attractive when weighed against its fast-growing backlog, ongoing global expansion, and core government contracts. With the stock rallying over 102% in just the past 3 months, this valuation discrepancy may close as investor sentiment aligns with the company's execution. Should revenue acceleration and international traction persist, BBAI could eventually command a premium multiple, particularly within the AI defense segment. Growth and profitability. Growth is being driven by domestic demand for security-focused AI applications. BBAI is rolling out its technologies across high-profile U.S. airports, including DFW, Denver, LAX, and Seattle, to enhance border and travel security. Strategic alliances, such as its April 2025 integration deal with Smiths Detection, signal an intent to expand globally by embedding its software into existing security hardware used across dozens of countries. Despite macro risks and near-term losses, BBAI is investing for long-term profitability through international expansion and platform scale. BigBear.ai generated $158.24 million in revenue last year, with its most significant revenue stream. Time and materials contracts accounted for $88.74 million, up from $85.73 million the year prior. The company's revenue is entirely U.S.-based, reinforcing its deep penetration in domestic federal and infrastructure markets. In Q1 2025 alone, it reported $34.76 million in revenue, though this marked a 20.7% decline from the prior quarter and missed analyst estimates of $36.26 million. For context, annual revenue rose only slightly from $155.16 million to $158.24 million year-over-year, but the company's backlog suggests a stronger H2 2025 performance could be on the horizon. BBAI's last quarterly results missed expectations across both revenue and earnings. Q1 EPS, 25 cents versus an estimate of 6 cents, which is minus 341.1%. Surprise Q1 revenue, $34.76 million versus an estimate of $36 million. Looking ahead, the company is expected to post Next quarter. EPS. Estimate 6 cents. Next quarter revenue. Estimate $40.59 million. You should monitor quarterly fluctuations closely, but long-term EPS trends suggest BBAI is slowly closing in on break-even. The financial health of the company is showing improvement with balance sheet fundamentals as follows. Total assets Q1 2025, $396.27 million, which is plus 15.27% versus Q4 2024. Total liabilities decreased 42.88% quarter-over-quarter to $198.47 million. Net income Q1 2025 minus $61.99 million. Despite a substantial net loss in Q1, the sharp reduction in liabilities and increase in assets suggests the company is realigning its capital structure and improving financial stability, an encouraging sign for long-term investors. However, Q1 also marked a pullback in top-line performance and widened losses, making upcoming quarters critical in assessing momentum recovery. From a technical standpoint, BBAI remains in a bullish setup, with an XABCD butterfly pattern forming. If it holds above $6.06, a fib time-targeted move toward $12 by December 2025 remains technically viable. However, breaking below $6.06 could expose the $3.87 consolidation point. BigBear.ai is no speculative sideshow. It's a serious player with real contracts, real deployments, and real use cases at the national level. Its discounted valuation, rapidly expanding backlog, and global ambitions make it a compelling watch for investors betting on AI's role in national and global infrastructure. While near-term earnings volatility remains, BBAI's fundamentals and technicals suggest the company is positioning itself to be much more than a footnote in the AI revolution. Let me know in the comments section if you are currently holding BBAI stock, buying, or waiting for after the Q2 earnings report. The next stock is D-Wave ticker QBTS. First, let's examine the fundamentals. D-Wave Quantum Inc. is a trailblazer in the development and delivery of quantum computing systems, software, and services. Unlike theoretical plays still in research mode, D-Wave delivers commercial access today through its quantum computing as a service platform, LEAP, making it one of the few companies bridging the gap between quantum theory and real-world use cases. The firm's value proposition extends beyond hardware. With a growing focus on customer implementation services, D-Wave helps clients, from manufacturing to logistics, harness quantum optimization for real-world applications. And with the recent Advantage system launch, the company is now entering a new era of performance, unlocking deeper AI workloads and quantum-enhanced blockchain use cases. With applications already deployed at Ford Otosan and Japan Tobacco, D-Wave is turning trial programs into real production revenue, marking a rare milestone in the quantum space. Here's where things get tricky. D-Wave is trading at a lofty forward 12-month price-to-sales ratio of 162.47x, far above its peer group and the sector median of just 6.71x. While the recent stock surge, plus 97.3% in Q2 2025, reflects strong momentum, this premium valuation poses downside risk if growth expectations aren't met. D-Wave's value score of F from Zacks also suggests overvaluation, making it a high-risk, high-reward scenario for speculative investors. Nonetheless, investors optimistic about the quantum megatrend might argue that this multiple reflects a scarcity premium for genuine quantum commercial ventures. On the growth front, D-Wave is making tangible progress. The Advantage system, with significant upgrades such as enhanced coherence and faster annealing, launched in Q2, potentially unlocking more complex quantum optimization and AI applications. The company is also exploring AI and blockchain integrations by launching a PyTorch-compatible toolkit and examining energy-efficient quantum blockchain architectures. D-Wave is focusing on system deployment, customer acquisition, and long-term platform growth, an all-too-familiar route for deep tech disruptors. Q1 2025 marked a breakout quarter for D-Wave, with $1,500 million in revenue, a remarkable plus 549% 68% increase quarter over quarter. However, this surge was mainly due to a one-time 12.6 million Advantage 2 system sale to the Jülich Supercomputing Center. That said, management has indicated that revenue in Q2 2025 will stabilize at around 2.52 million, representing a more consistent stream from subscriptions and professional services. The key for investors is understanding that Q1 was an outlier, not the new norm, at least for now. Expect uneven revenue patterns typical of hardware-heavy models with long sales cycles. D-Wave surpassed expectations in Q1 with the average earnings surprise over the last 4 quarters is a negative 65.28%, indicating consistent underperformance compared to consensus. Until customer conversion accelerates further, analysts remain cautious about near-term growth. While there are signs of operational progress, expect ongoing EPS volatility and revenue fluctuations linked to large hardware orders. Looking at the financial health, despite operating losses, D-Wave is strengthening its balance sheet. These improvements offer stability as the company pushes deeper into commercialization. Crucially, the Q1 loss is modest by early-stage standards, and asset growth suggests healthy capital deployment from prior fundraising or partnerships. Financial durability is key in quantum, where R&D burn and sales cycle lag are natural challenges. For now, D-Wave appears to have sufficient runway. But make no mistake, this remains an early-stage, high-volatility investment. The premium valuation, revenue concentration risks, and inconsistent EPS history call for caution. Monitor Q2 earnings closely. A miss could lead to a pullback, but success with AI, Advantage 2, and international expansion could position QBTS as one of the most asymmetric bets in the deep tech ecosystem. However, remember this isn't financial advice. It's only for educational and informational purposes. Investing in stocks is risky. If you find the video valuable for 2 AI stocks to buy now or keep an eye on, please like, share, and subscribe.